Hi, welcome to the second episode in our new podcast series called Buy Your Kids a House. Again, I'm Matt, this is Andrew, and in this episode we're going to dive into the first of our subset in this series. It's called Fix the Future. And I know sometimes when we look at our personal finances and we're looking at things that might be impactful like our mortgage or student loan debts and everything, but what if I told you some of the things that are more impactful for that might be things that seem to be out of our control at the moment, like rising housing costs, rising healthcare costs, and inflation.
Yeah, and what's crazy is it affects me just as much being in my 30s and renting as it does you being a dad and having kids.
So in this series, we're still going to be going over the personal finance element, but in this, we're going to zoom out a little bit for Fix the Future. And we're going to look at things that are maybe a little bit further down the road, things like 5, 10, 20 years from now, and see how those things might impact not only us, but our kids, maybe even our grandkids down the road.
Yeah, well, let's get into it. All right, so let's go ahead and dive into these topics, starting with some of the big issues like housing affordability. I know for me, I'm still renting because the market right now is crazy. The house payments were astronomical when I looked into it, and the down payments that they want these days, and the interest rates are getting crazy and a little bit out of hand because, again, it's something I've been wanting to do for a while now, and just looking at the market and the trends and how it's going, and just being able to navigate, is it the right time, is it not the right time? And I think for me at this exact moment, renting is just a better option.
No, I absolutely. I mean, the idea of what housing prices and everything are now. I was lucky. I bought my home right after the last bubble burst in 2008.
Right.
But even before that, like I was one of the ones on my soapbox screaming and yelling, like, "What is going on with these prices and everything?" Because they were shooting up so much, and that was when you saw apartments overnight turning into condos and things,
Yeah.
and all this. Prices kept shooting up and everything. I know they've even made several movies based off of it and everything, but I was saying like the bubble has to burst here, and it did, and I got, was lucky enough to get with that and got a house at that time. But nowadays, like the idea of a starter home is just totally gone.
Right.
And add in the fact that the house prices have gone up so much, you also have now much higher interest rates and everything coupled with that. So it even compounds even more. And with that, I'm still saying there needs to be a bubble to burst, but I don't see the same triggers that's going to cause that bubble to burst like it did back in 2008.
No, exactly. I mean, it was great if you could afford to buy a house when the market crashed with it, and it was the all-time low for many years.
Yeah.
It has been, and we've only seen a trend up, and especially the past 3 years, everything has just been skyrocketing. I know in the area that I live in, like when this was first under construction, houses were starting at $400,000 or $500,000 for these really big houses.
Yeah.
Now I looked it up in the area right now. They're going for $900,000 to $1.2 million.
Yeah, no, it's really insane with that. Like, and again, you're thinking of a even younger couple than what we are. Like, if you're in your early 20s and you're trying to be newly married and starting a family and things like that, like the thought of going out and finding $250,000 home as your starter home just totally gone. Like now, an entry level home, at least in Orlando area, is $450,000, and to me that's not affordable, especially for young families trying to start things off.
Oh, definitely not. I mean, depends on where you look to. Obviously, a lot of things have to do with the regions and like the taxing for that area and the county and stuff like that. But just overall, it's so overwhelming just to look at all of that and the breakdown and all the hidden costs, and like even if you're doing a first-time home buyer's loan, even that is your payments are insane, and the interest rates right now are luckily going down a little bit, but not enough to matter.
Now we're not quite back at the 3s and 4s we saw a couple years ago and everything.
Yeah.
And like you said, the hidden costs also something a lot of times people don't take into consideration, because a lot of times you don't just have like your mortgage and costs. There might be PMI involved if you're doing an FHA loan,
Right.
but also there's HOA fees, and also the very rising cost right now is homeowners insurance. Something really big in Florida. We're Florida here, and with the aspect of hurricanes and everything very frequently in this area, homeowners insurance is skyrocketed. Coupled with the fact of now everyone needs a roof replaced every couple of years and everything with it, so our home insurances are shooting up, which is another hidden cost when it comes to buying a house with that.
Yeah.
And that's definitely impactful as we have 2 storms out in the ocean right now, Imelda and Herberto out there hanging out. But with that is another area topic that is very near and dear to me is climate change and everything with that. So,
Right.
And we're going to dive into the impacts of that, not just from the homeowners insurance aspect of it, but also seeing what other areas. So Florida based being it as well, we have a lot of what's called red tide in this area that always hits us in the summertime.
Yep.
It makes the beaches almost unable to go to because of the amount of the fortunately a lot of fish they struggle and they die and they wash up on shore, and it just makes the beaches like just not pleasant to go to. And what can we do to clean that up? And other aspects of also owning a home on the beach, like is that even still feasible? Because down the road might not be able to have a home on the
beach. And I mean, even the homes on the beaches right now, because it's desirable location, those are skyrocketing in price. Something for like a 2-bedroom, 1-bath is still going to cost you so much more than what you can afford typically, especially with the increase of the housing market and the not massive increase of pay.
No.
So like minimum wage has gone up, but it's still not going to be meeting where you need to be to meet your, like you said, the mortgages, the FHA, the HOA fees and things like that as you go on.
No, definitely with the inflation of a lot of those fees and everything, we're seeing that trend of the costs and everything going up. But the data is showing, like you said, that the wages are stagnant in comparison. And yes, Florida just had a little bit of a bump of our minimum wage in the state of Florida that just wouldn't affect the beginning of this week. But that's not enough to match what the rate of inflation is going, especially since COVID time, and we've seen rapid inflation in the last 5 years. And way exceeding the normal goal. Like usually you have like 2 to 3% every year, but we're seeing 6, 9, 12% a year on a lot of your main costs of goods. On top of the fact that then you also have your bigger costs, the insurances and things along those lines, and still those premiums, and wages are not keeping up with that.
It's crazy. It's just the idea of not being able to buy a house if I wanted to buy a house and be able to afford it long term, and looking at all of those different things versus renting, you don't get as much for what you're paying for, but at the same time it's a decent amount lower of total cost than it would be to own a house. So looking at that, if it's right at the right time, and going down the road, and hopefully these start to drop and the rates start to drop a little bit so that other people that want to buy a house can look into it and be able to afford it with where they're at, instead of having to get that 3rd and 4th job just to pay for a mortgage.
Yeah. And then also with paying for a mortgage, one of the other main areas of concern lately is also medical costs. Whether it's paying through health insurance or even just having a medical emergency happen. Right now, I've seen reports out there that roughly 77% of Americans don't have enough in their savings to cover a basic medical emergency. Because not only is it paying their medical bills, but it's also taking time off of work, things like that. A lot of times, a lot of companies don't offer paid medical leave or short-term disability, things along those lines. And a lot of people, obviously you're in the service industry, you're not working, you're not earning money. So you're getting a double-edged sword. Like now I got to pay for my broken leg or whatever other medical emergency happened, but now also I'm just not earning
losing the income at the same time.
Yeah, and then add in the fact that very few companies, it seems less by the day, are offering health insurance, or they're switching more from full-time to part-time so that you don't hit the threshold required to offer health insurance. On top of the fact that premiums are going up, on top of that they're offering less, or the denying of things. Again, a lot of insurances right now, the first thing they love to do is just deny your claim, then you have to jump through those hoops. Like that's just a struggle right there and everything. So I was, fully disclosure, I have some back issues and everything. I was actually just dealing with that myself. That my doctor prescribed, like, hey, I want to send you in for an MRI. First thing the insurance does, deny. I call them up, why'd you deny? Because you didn't check this box. So I go back to the doctor, we go back and forth, and just making things difficult just for the sake of making it difficult, because their hopes is that you're just going to walk away and give up on it.
Right, no, exactly. And I mean, that's with having insurance. I'm part-time, and unfortunately it doesn't provide me with medical insurance. And the stigma behind that too, trying to find places to go that accept just cash payments, or looking into private insurance, because private insurance is astronomically expensive per month just for myself, not alone having a family or anything like that. So looking at okay, so at this point I'm just doing my annual stuff, I'm doing my annual blood work and checkups and stuff like that. So is it worth paying for all of the insurance for the whole year versus just those office visits? And also, unfortunately, a lot of these places look at you differently if you don't have insurance. It's like, oh, what'd you do wrong in your life that you don't have insurance?
No, there definitely is a stigma to it. Like you feel like you walk in and either A, are they going to reject you, or B, are they going to give you less proper treatment because they're expecting you to potentially not even pay for it. They may not offer you some of the things that you need to have in there and everything because they're worried that okay, well if we did the super duper treatment, broke out the better MRI, broke out the better CT scan, they may not walk away and get the money recovered from that. Add in the fact of, I know we know some people that do walk away from the medical bills. Like a lot of times, there is the credit aspect of it, of having your credit score affected because you have these large medical bills that are coming and they become a snowball effect that you can't overcome it. And so you maybe put your hands up in the air like, hey, forget this, I'm not going to pay this. And then you're taking the financial hit on your credit score and everything as well. So there's that aspect.
And then that affects, like, it's just a chain of effect, because then that affects you trying to get a loan for a house and then your car or like anything, honestly. If you want to be able to lend money for any reason, that affects it so much, which is crazy. And that kind of like ties into another topic that we're going to talk about as well, but like debt, student debt specifically, everyone that has those student loans that aren't able to keep up with that, they're not even considering buying a house right now. Unfortunately, it's not even on a radar for a lot of people because of that, and let alone, God forbid, something would happen medically and they have to, either pay for that or just let it affect their credit and not be able to pay it back. And so looking into the debts and stuff like that of student debt, I know there's a mass quantities of people that still have a huge chunk.
My wife's one of those. Luckily, we're hopefully paying on that off soon. But I mean, she's 20 plus years removed from college and still paying it off. Now, granted, in her younger days, she made a sort of mistake, like a lot of people do. They do the deferrals of the loans and everything, where they're kicking the can down the road. But what they don't tell you is they're gladly doing that because the interest is still climbing on it. Or they'll do those income-based repayment plans where people think, oh, I can afford $200 a month. Well, they're doing that without adjusting the inflation. So again, your principal's still going up, and what was a $10, $20, even $50,000 loan now is slowly creeping up, and you're 10, 15 years down the road paying it, and you're looking at your balance, like, why is my balance going down? Well, it's because you're only paying a portion of the interest. So the companies love doing that. Plus, student loans are one of the very few debts that even if you file for bankruptcy, still stays on with you. You can't even file for bankruptcy and escape student loan debt.
That still is crazy to me. That even that, you can't get out of it. Like, no matter what, you still have to pay off that.
You're locked in for it no matter what on that. And then on top of everything, with all that debt and everything, looking at the element of what your future affordability is, because when you're buying a home, your debt to income ratio is impacted by that. Because they're going to look at what that loan is, loan payment, and again, still affects your credit score, other affordabilities and everything down the road. Now, I love the thought of student loan forgiveness, and I think there are roads and programs that could be implemented with that. But I would love more so look at what we can do first off for the affordability of college, because again, college itself is way more expensive than what it should be, whether it's the books, the classes themselves, things along those lines. But also, much better education needs to be given to the young people taking on these loans.
No, absolutely.
The impact of what it is like to defer a payment, to do your income-based payments. Also having the knowledge of what career looking into and everything, the likelihood of getting into that career, and is it feasible and everything to go along those lines. I was actually just reading an article the other day that they're actually saying becoming a lawyer may not be as financially feasible down the road because the loans you have to take on to become a full lawyer in comparison to what your starting income is, or the ability to find a job quickly, doesn't offset the cost of having to stay in school that much longer to become a lawyer than just your typical 4-year degree.
And see, that's crazy to me because like before, we always think you're a lawyer, you get paid mass quantities, and like there's only like in the world there's only a minute few that do that well. Everyone else thinks that they're all making 100K plus. And that's not always the case.
Well, even 100K now isn't the 100K.
It's not the 100K of past.
We all think like, you're making 6 figures, you must be doing really well. Well, now that income isn't what it used to be. Like, again, I'm a little bit older. When I was in college back in the early 2000s, like making 100 grand a year was like the end all be all. If you're making 6 figures, you've made it.
You're set.
Now, 100 grand now is almost the same as making 50, 60 grand was back then. Like the impact of that with inflation just has shrunk so much. But with that, like we're also not just wanting to highlight these topics. We want to try to find solutions to these topics.
Oh, absolutely.
Because again, we can all point out the problems, but how does that help us if we don't look at ways and everything actually to fix those problems? Now, granted, we might not have the right solutions, we might not have the right answers, but our goal is maybe to highlight opportunities we can look into, what can be done, what you can do to maybe fix your own personal finances, but also expand beyond that, helping your community in the area. I know you'd be like a lot of volunteering opportunities and everything that you're talking about.
No, absolutely. So doing different things, like you have your classics like Habitat for Humanity, and you can go do things like that to help impact the community, but you can also do things like more centrally located as well. There's always events going on and things like that. I know for me, for a while, I was before I moved to this location, I used to teach ballroom dancing just for the community within the apartments. And I had a bunch of people come in, and everyone was getting together and just having something fun and like-minded like that to be able to do within the communities is really cool, of something to bring people together. Now that doesn't specifically help the environment as well, but doing things, getting out there for like Earth Day, planting the tree, or just looking at different options of fun things that you can do that helps the community, brings it together, as well as brings in maybe some more income to the area as well. Like bring the people in to be able to spread the love, if you will.
Well, and then again, the idea of building a community to me is also essential, because I think a lot of fixing all the problems is that we're all in this together. And if you're helping a community grow, that's going to bring your community together more. And then with that, you're going to be able to find solutions when you're all working towards a central goal, rather than, unfortunately, a lot of times we're very divisive and everything right now. And again, bringing that ideas together of what we can do, whether it is, helping, learn people ballroom dancing, just being active, getting in that community.
No, exactly right. And if you care about what your future and your kids' future will look like, stick with us.
Yeah, and then please also look at our other episodes in this series, so you can also see the full picture of this, because this is only one portion of that whole picture.
Oh yeah, no, there's a lot of topics to go over, to dive into, and like we've said before, be active, comment the different things, comment, it help us out a lot first getting started as well.
Yeah, and then again, as we covered, we have some big topics and everything, but there's lots of other ones we're going to dive into, like the cost of sports in general, and so what also affects you in your area and everything. And again, please put in the comments things that might be impacting your area, because obviously we're Florida-based, Orlando-based, so I brought up areas that are climate impactful for our area. But I know California, for instance, is big with the wildfires and the droughts. Alaska, a lot of the glaciers are going away. So please put in the comments those things that are impacting you, so we can also address those topics as well. We're not just a Florida-based show.
Yeah. Absolutely. So around the world, stick with us, like I said. Thank you again for everything. Like, comment, subscribe, and we'll see you next time.
Yeah, thank you. Bye.